Both the overall stock market and a few of our favorite companies' tickers are set to explode. And I'm not talking about any of that long-term investing stuff. Of course, that's still great, but I'm talking about in the short term. I'm talking about this week, next week, the first half of June, things are set to pop. And in this video, I'll be proving it to you. We'll be doing a real breakdown. This isn't any of that gut feel BS. I'll be giving you price momentum, price action, options flow, and all the reasoning behind why I think the bulls are about to take control. But before we get to all of that, of course, if you enjoy these type of market breakdowns, don't forget to like, subscribe, share it with a friend. And with all that being said, let's rock. Off the bat, I should clarify something. In the world of active trading, once again, not investing, I'm talking about day trading, swing trading, scalp trading, it's a game of probabilities. And what we're trying to do in this video is identify the highest probability pathway, which is a fancy schmancy mathematical way of saying not guaranteed. But once again, we are looking for those high probability pathways. So to get a better understanding of what the highest probability pathway forward might be, we first have to understand where we're coming from. And when the world's largest casino officially closed today, here was the headline. S&P 500 posts modest gain to start June as investors shrug off global trade tensions. And it's that latter half, the global trade tensions, where we really need to start our video. But before we do, just so you can see the overall stock market, the S&P 500 gaining 0.4% today, which means from the recent low, we are up a very respectable 22.8%. And then from the all-time high, we are only down a mere 3.4%. So it was a very nice recovery in terms of where we were at the start of the day. And when this heat map of the S&P 500, when the market officially opened, this whole thing was pretty red. And you can see by the end of the day, it wasn't a full-on recovery, but it was a very nice recovery. And it relates to, once again, the trade war tensions. US-China talks a bit stalled and need Trump and Xi to weigh in, according to the Treasury Secretary. This was what was reported at the end of last week, and then over the weekend, the situation did not get any better. China counters Trump's accusations of Geneva trade deal violations, says the US is undermining the consensus. So once again, over the weekend and really leading into the weekend, we realized that the trade discussions and the talks and the situation was going a little bit more in the bearish direction than in the bullish direction. And then, of course, just to add a little bit of gasoline to the fire, when you're in a trade war and you're fighting with China, why not add in the EU? And apparently that was the administration's plan. Trump's 50% steel tariff could see prices tank in Europe and soar in the US. So obviously the tariffs in the world of steel went from 25 to 50%, doubling them up. And as you might assume, the EU clapped back and said, hey,
we have our countermeasures prepared.
So in all this craziness and also the fact that we saw bonds once again falling, we actually saw gold making a really nice push to the upside, gaining 2.7%. So even though this isn't an all-time high, gold is getting once again very close to it. And another part of the reason why we saw gold going up and bonds going down was early this morning, on top of all that trade war stuff, we got some bad numbers from the manufacturing data drop. You can see here at 9:45 and then again at 10 a.m., all three of these numbers coming in lower than expected, as in the manufacturing numbers not as strong as we could expect. Quick side note here, at 1 p.m. today, the chairman of the Fed, Jerome Powell, he did have a speech and it was very much a nothing burger. So I would argue when you boil it all down, this talk really didn't have much of an impact on today's price action. Speaking of which, here's a more detailed view. You can see the SPY and the Qs and pretty much everything had a rough start until about 10:15, and then that's when we really started to get pumping. The SPY up 0.56%, the Qs up 0.8%. There's a lot of green on the board. The only red thing I'm really seeing right here in terms of some of our favorites are Bitcoin, which is just barely down, and then Tesla, which is down 1%, but that might relate more to the fact that Elon had a black eye out of nowhere and everyone's a little bit curious about what's going on. In reality, things cooled off pretty quickly. Yes, we had the bad data report at 9:45 and then 10, but a little bit after that, we heard from the White House that maybe things aren't so bad. Trump team pushes for Xi call as trade tensions simmer, and the rumor mill is telling us that these talks might happen as early as this week. So it might be one of those things, the classic pattern that we've been seeing lately, where things are really bad and that's how it's being presented to us. And then within a couple days, they're actually, nope, it's completely resolved and the market rallies anyway. It seems as if right now, now the market is kind of front running it. Not only are we seeing that in terms of the price recovery, but we're also seeing it in the options market. So I want to clarify, we're now getting into why I believe the highest probability pathway is actually up and up and up. So we can see this strong intraday recovery, and we know that the news kind of simmered down, but look at what's going on in the world of options. As around 2 p.m., we saw a lot of strength. The delta started popping. You get this from a combination of buying calls and selling puts, both of which are bullish. So we're seeing that in the S&P 500, but it didn't stop there. We also saw it in the Mag 7, and in fact, in the Mag 7, it started hours earlier where people were loving the call buying, they were loving the put selling, we were adding positive delta, we were removing negative delta. Both of those together is a really nerdy financial way of saying the bulls are in control. And I should note that the earliest bets for these expirations are actually this Friday, as in they were bullish bets for this week. So the price momentum in the shorter time frame, obviously bullish. The options flow bullish for today and also for the remainder of the week. And then we take a step back, we realize that the overall momentum, we're on top of all of the EMAs, very, very bullish. And then here, we're knocking on the door of a technical breakout. Right here, we put in a higher low. The question is, are we about to put in a higher high? I love it. And on top of that, the little cherry on top that I don't see many people talking about, and this is free, Kohrs.locals.com. It's in the description of this video. It's always been free, always will be free. It's a newsletter where I break down everything going on, but I want to bring your attention to one specific thing. Tuesday, June 3rd, over the past 27 years, the better part of 3 decades, the bulls have won this day 81% of the time. So from stock market open in the futures market, which is technically 6 p.m. the day that I'm filming this Monday, all the way to 5 p.m. the next day, the bulls have won this 4 out of 5 times with a sky high profit factor of 17.7 on an individual day. This is one of the most bullish days of the entire year. Now, is that a guarantee? No, I'm giving you the exact odds right here, 81% over the past 27 years. But when I look at this bullish seasonality, I pair it together with the technicals that looks like we're getting a bullish pennant breakout or whatever the hell you want to call it, on top of an incredibly strong options flow. Well, all of a sudden, I really like this breakout and continuation as the highest probability pathway. So as we've covered, there are various quantitative and empirical measures that tell us the bulls are in the driver's seat, but it doesn't just stop with the overall market. Check this out. Some of our favorite individual equities are ripping, and the first one right here is Meta. Higher highs, higher lows, made a nice base, kind of a cup and handle, and I'm just looking at this next technical resistance just below $700, which would be a nice psychological target, but a beautiful breakout on Meta. Broadcom, AVGO, knocking on the door of a new all-time high. And then obviously I want to put Palantir on your list because it did make a new all-time high today. So it's not just the overall market, and granted there's a lot of opportunity here right now, but the ones that are really jumping out to me beyond the S&P 500 are Meta of Facebook, Broadcom, AVGO, and then Palantir, the PLTR, the gift that keeps on giving. Folks, right now it looks like we're on a trampoline and this thing is about to bounce. Now, of course, these are my own thoughts and opinions. I implore you to come up with your own opinions and execute it in low risk, high reward type of scenarios, but I would love to hear your thoughts in a comment below. That's what I have for you right now. I appreciate all the good vibes. I'll catch you in the stream tomorrow. Have a good one.